Your company's accounting is more than just the day-to-day processing of financial transactions. It is the foundational data of your company that determines if your business is making money or not. In this video, I'm going to review two key accounting processes that need to function smoothly in your business. At the end, I'll share the one thing every business owner can do for just a few minutes each month to ensure the cash balance on your books agrees with your bank. Now, let's start by defining the processes. The first generates cash and is called order to cash. The other distributes cash and is called procure to pay. Order to cash processes the transactions necessary to fill a customer's order and get paid for it. Here's the accounting process. We create an item we sell. We put it on an invoice, we collect payment for that invoice, we deposit the cash in our bank. Simple. What we want to focus on in this process is the invoice. It brings together all the data we need to make decisions. The most important piece of data on the invoice is the item. The item assigns revenue to an account we can easily measure. It tracks pricing and units sold and tells us how profitable an item is. Now here's a pro tip. Use items to track different discounts you offer to your customers. It will help you see how effective your discounting programs are. To make sure you're getting paid, run an accounts receivable aging summary once or twice per month. Question any invoices that are more than 30 days old or any negative amounts anywhere. You should also vouch your sales by running a sales by customer summary report and comparing it to any operational systems you use that measure sales. This helps you avoid revenue leakage, amounts you have not properly invoiced due to a failure in your process. The next process is to procure to pay. This process controls how we spend cash. We order an item from a vendor, receive it, enter a bill, then pay for it. We'll also include things like payroll and tax payments here. The most important piece of information here is the vendor. Most people tend to measure spending by who they are paying, so we can figure out if we're getting value from them. If you're just entering transactions from a QuickBooks bank feed, make sure a vendor is entered every single time. If you don't, you'll get a not specified amount when you run an expenses by vendor summary report. Sometimes our vendor list can get big in a hurry, so here's a pro tip. Organize vendors such as restaurants into a single food and beverage vendor, so you don't have to create a new vendor every time someone dines out. Within each of these transactions, you have the ability to capture and easily report key information that helps improve your company's performance. It has to be correct, however, so I'm going to share with you one thing you can do to make sure your bookkeeper is properly tracking your cash. Once a month, review a bank reconciliation report for each bank and credit card account you have. This is easily generated by QuickBooks and it looks like this. Go to the uncleared items section. Question any uncleared deposit more than 5 days old and any uncleared withdrawal more than 30 days old. These transactions are in the cash balance on your balance sheet, so if they're no longer valid, they need to be removed. Otherwise, the cash balance reported in your accounting system will be incorrect. Hope you found this video informative. Check out our next pillar reporting by clicking on the link below.